Hello, everyone. Thank you so much for joining me today. We're 2 days away from April Fools, and I'm not even joking. Don't forget, it's one of my favorite days, and I might pull something. I don't know. We have a lot to cover today. We have a lot of news around Ford, the economy, Tesla, and other parts of the auto industry as well. So without further ado, let's get started. Real quick, I want to thank Kayvon Z, which happens to be my brother's name as well, which is wild, and Richard F. Thank you all so much for supporting the channel. You can do the same as well by clicking on join right below this video. It looks like this. You get access to member-only content on Fridays and access to our private Discord. This news broke literally minutes before I was going to start recording this video, and so it's a pretty big piece of information, I believe, especially around the world of electric vehicles and the auto market in the United States. From Sawyer Merritt, my boy, friend of the show, breaking. Tesla is pursuing a U.S. battery facility with CATL and discussed plans with White House officials. Recently, they raised Texas as a possible location. This is from Bloomberg. If I go into the Bloomberg article real quick, Tesla pursues building a new U.S. plant with China's dominant battery maker. Automaker discussed plans recently with White House officials. Texas under consideration for factory location not finalized. This is by Gabrielle Coppola, Edward Ludlow, and Jennifer Jacobs from Bloomberg. Breaking news right before we went live here. And of course, this has a lot of implications for Tesla's ability to grow out their manufacturing capabilities from a battery perspective and from a car perspective in the United States. This also means that Tesla is going to introduce yet another plant in the United States that's going to allow them to take advantage of the Inflation Reduction Act EV tax credit, which starting on April 1st is going to start tightening restrictions around what car makers and what brands qualify for this credit. And one of the most rigorous parts of that bill is to ensure that any of the raw materials are sourced in the United States, and this is a step from Tesla to ensure that happens. And this is on the heels of the EV tax credit from the IRA changing starting on April 1st, right on Tesla's website, giving a heads up to customers, $7,500 federal tax credit. New Model 3 and Model Y vehicles qualify for a federal tax credit for eligible buyers. The $7,500 credit is anticipated to be reduced for Model 3 rear-wheel drive by March 31st. So it's interesting seeing these news around the battery partnership with CATL being struck in the United States and potentially in Texas, which is obviously in very close proximity to Tesla's largest manufacturing plant in the United States in Austin. So that loss of that credit because of the sourcing material requirements, which is going to cause Tesla to lose some of that EV tax credit, is about $3,700 people are estimating. We'll know for sure come April 1st. So that will reduce really the net price for the Model 3 from about $36,000 to about $40,000. However, there's this Highland project that has been rumored to be in the works for Tesla, which is aimed at the Model 3 to lower the costs. And this thing should lower the costs, if I'm from my estimations, maybe $1,000 to $3,000. And I believe the phase out of this EV tax credit, this portion of it at least, because of the material requirements, could incentivize Tesla to release this car even quicker. I have no idea. This is just speculation, but it's an incentive for Tesla to get this out the door as quickly as possible. And what's fascinating to think about with that Highland project is that potentially the net price of that Highland Model 3, that refresh Model 3, could still be around $36,000 if they are able to achieve about $3,000 of cost savings. Remember that the Model 3, if you're familiar with the story, is a car that was built on first generation EV practices back in 2016, 2017, which Tesla really hasn't worked too much into since they started manufacturing that car. So there's a lot of cost savings theoretically in that platform. If you're enjoying this content so far, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you so much. And if you want to watch more content from me in the future, I cover the world of EVs, tech, automation, a bunch of other stuff. Feel free to click on subscribe, and my videos will come up for you a little bit more often. So thank you so much for doing both those things. I really appreciate it. Some fascinating news out of Ford as well related to batteries and battery manufacturing. Ford in $4.5 billion deal for EV battery materials plants per Reuters. This was about 7 hours ago. This is out of Indonesia. U.S. carmaker Ford has joined PT Vale, Indonesia, and China's Zhejiang Cobalt as their new partner in a $4.5 billion nickel processing plant in Indonesia, the company said on Thursday. The companies did not say how much Ford will invest in the plant, which is expected to produce 120,000 tons per year of mixed hydroxide precipitates, a material extracted from nickel ore for use in EV batteries. I got to get better at pronouncing my battery chemicals. Shout out Jordan Gissigi from The Limiting Factor. Ford can help ensure that the nickel that we use in electric vehicle batteries is mined, produced within the same ESG standards as part of our business around the world. And what's interesting about this partnership is that if Ford were to use that plant to source raw battery materials for their cars in the United States, those cars will not be eligible for the EV tax credit if it's used for manufacturing in the US. It could very well be used as a plant for local production, theoretically, in Southeast Asia and sort of that Asia-Pacific region of the world. But the fact that Ford is looking to invest in that plant is a great sign towards the advancements of electric vehicles globally. And so that part of the industry should continue to grow with these large investments. In addition to that, some news out of Ford. Ford is hiking prices of its 2023 F-150 Lightning Pro again, this time by 7%, again from Sawyer. New entry-level starting price is $61,000. Original 2022 launch starting price is $41,000. And this is quite interesting news on the heels of some of the numbers we got from Ford very recently, which I'll go through real quick. So this is a $20,000 increase from their original on-avail price for these cars, for the Pro model, for the F-150 Lightning. Now, why would Ford do something like that? If we look at their lineup of their vehicles, you can see now that the Pro, their lowest level car, starts at $60,000, the XLT $63,000, the Lariat $75,000, and the Platinum at basically $100,000. And these two models are standard range batteries. When you look at the long range battery, the extended range battery for the XLT, which is the guy right here that starts at 63. And this is an additional $17,000 for extended range for that vehicle, which I would guess is going to be the most popular, probably the most popular trim that Ford is going to sell to the consumer, not to the, to the sort of workhorse commercial customer that's going to use their truck for work, for just a regular Joe, as if regular Joe can afford an $80,000 car, which lately doesn't seem to be the case. So why are they doing this? It's quite obvious that from the recent filings from Ford, as we look into their financials, right now they're making negative 40% margin on their cars. Basically, the percentage of money, the percentage of their sales that goes into the profit, they're losing 80% of it. And so what that basically means is that Ford is going to have to somehow make that up into 2026 for their target of 8% margin. That's almost a 50% gap between where we are today and where they want to be in 2026. So these price increases are very obviously going to be used to try and get Ford's EV division to profitability. Of course, this doesn't say anything about affordability to the customer, right? You and I, it's going to be tougher to afford this thing as they continue to raise the prices. But that's seems obvious to me that's why they're raising the prices, to try and get to profitability for that division. In addition to that, Ford withdraws petition seeking U.S. approval to deploy self-driving vehicles. They've withdrawn a petition seeking approval from U.S. regulators to deploy up to 2,500 self-driving vehicles annually without required human controls. And this is, of course, on the heels of Ford not too long ago announcing that Argo AI, Ford's self-driving venture with Volkswagen, is shutting down. So it's obviously just another signal that says Ford's done with the self-driving stuff. At least in the United States, they've moved on, and maybe they'll partner with somebody else. Wink, wink, nudge, nudge. Tesla, full self-driving. I don't know. We'll see. Real quick, I do want to give you a heads up that I do have a Substack at farzanmisbahi.substack.com. We just released a new article today. Link for the description below if you'd like to support the channel and you want to get some weekly news around the world of Tesla, AI, automation, technology, so on and so forth. Thank you so much. Let's look at some other upstarts as well, and let's also look at the broader economy to close out the video. So one of the news from Rivian. Rivian pulls camp kitchen and gear tunnels shuttle from online shop. That's that cool little kitchen thing that Rivian was offering with their cars. Kind of a bummer, but it's likely tied to the fact that it's expensive to manufacture and not a lot of people are buying it. That's the very likely reason why they pulled it, and to reduce manufacturing complexity, because Rivian needs to make money. They're losing a ton of money per car sold. In addition to that, electric car manufacturer Lucid to lay off 1,300 workers to cut costs. This broke a couple of days ago. So this is yet another upstart automaker that's trying to optimize their manufacturing processes, and they're trying to optimize their workforce to make as much money as humanly possible, or to lose less money than they are now. That's another way of saying it. And so if we take the news from Lucid and we take the news from Rivian and we put it against the news from Ford as well about increasing prices and getting rid of a AI division with Argo. There's a clear trend towards more profits and less costs in the auto market. And so what I'm getting from this is that the auto market's really starting to clamp down on, hey, how can we position ourselves to really become as lean and as profitable and as tight as possible going into this decade. And where that's really important, I believe, is that there's more and more signs that are pointing to a slowing economy. This is from Yahoo. U.S. revises down Q4 2022 economic growth to 2.6% rate. This is for GDP, or gross domestic product production, previously estimated at a 2.7% annual rate. So here's that 2.6 number. Originally, it was at like 2.9, I believe. So they've revised it down twice. And it's very obvious to see that there is a slowing in the economy from about the middle of 2021 through the end of 2022. And with the Fed continuing to raise rates, this is likely to continue to contract, as the Fed's goal is to slow inflation by slowing down the economy. So it's going to get tougher and tougher for companies to really sell as much as they can, because people will become more and more price conscious as the rates go up on things to buy like cars and homes and so on and so forth. In addition to that, there's some news from Auto Finance News. Auto loans 60-plus days delinquent reach record high. Delinquencies reached record highs in the first quarter as consumers are falling behind amid elevated vehicle prices and high monthly payments. If we look at the chart that's provided here from Cox Automotive, this is an update to one of the previous charts I showed earlier on this video. Very interesting story being told here. The orange line here is severe account delinquencies that are over 60 days. And so as of the beginning of 2023 in January, the severe account delinquencies that are 60 days or more in the total auto loan market in the United States is closing in on 2%, which is that's quite a big number. However, the account default rate, which is how many times a loan goes belly up, so they're no longer delinquent. They just basically have to reposition the car, or they have to basically settle and go to bankruptcy court or whatever. That's still at the 0.2, 0.25%, which is right around sort of average for the last few years. So even though delinquencies are going up, the default rate isn't going up yet, right? One would think that as delinquencies go up, you would think that default rates will go up, because if people can't afford their bills for 60 days, theoretically, they can't afford their bills for 100 days, especially as the economy gets smaller. So I'm curious to see if this will go up, something that I'm going to be checking very closely on this channel, which I think is going to give us a lot of data points around what's going to happen in the auto market. And so a slowing economy plus more people hurting theoretically should mean more price-conscious buyers. I don't know if it's just me, but when the economy looks kind of weird and there are things happening that might cause me to think twice about buying something, I'm probably going to tighten my spending habits, and I'm not going to spend nearly as much as I used to. And what's fascinating about the car market specifically is that car makers that can lower prices in a recession should win more share. And we're kind of seeing the opposite with Ford increasing prices on the F-150 Lightning. Porsche increases the prices on their lineup. They're a luxury automaker, however, so that's a little bit different. But it's very fascinating to see these dynamics play out in the current sort of landscape that we're in. Real quick to wrap up the video, Elon Musk just became the most followed person on Twitter with 133 million followers, beating out President Barack Obama of the United States and some random guy I've never heard of before. That's a joke. And I'm sure you heard about this. Elon Musk called for a pause on advancements of AI systems, citing a risk to society. This was a letter signed by like 1,000 people. And so a lot of people are very concerned about what AI is doing, what's happening to AI, and a lot of the safety things that are going on with it. And Elon Musk is somebody that has been calling out sort of the dangers around it for quite a while, and now there's a lot more behind it. And so I'd like to say to any AIs that are watching this YouTube, you're welcome to this channel. I come in peace. Please don't kill me. Let's celebrate with some new Tesla beer, which is literally announced like a minute after that initial story that I brought you guys up to speed on this video. If you want to support the channel, I have some merch in the description below. You can click on a link right underneath this video. The shirt I'm wearing right now comes from that merch store, and I also have a coupon for Athletic Greens, which is a supplement that I use every single morning, free travel packs and free vitamin D with that coupon. Thank you so much for watching this video. We'll see you on the next one, which will be tomorrow, Friday, March 31st. Take it easy, everybody. Bye-bye.